And we're now live here. It is Tuesday, 8/24/2021, and it's our halftime report. Daily show where we go through these markets one step at a time, analyzing the charts, the price action, the news, breaking it all down, hopefully to help you guys better run your daily routine. And we've got a couple coaches from Tackle Trading here to analyze all this information here today. Coach Matt is leading screens, going to be the headline analyst, breaking down these charts for us. Got a couple of stocks and earnings roundup a little bit later in the show as well. Coach Emily is back for her regular Tuesday appearance. The Queen is here, and we're going to have another round of Queen's Court a little bit later in the show. I got my head chopped off last week. Hopefully we can keep that intact this week. But let's bring the team in here for one at a time. Matt, how you doing today, sir?
You know, Tim, doing absolutely fantastic. And there was zero chance you weren't getting your head chopped off last week. You could have had like the best trade ever. I had a sword. That was it. That was the entire analysis. But excited to be here for another edition. And unlike last week where I just had the responsibility of chopping people's heads off, I may get my head chopped off today.
You're at least in the contest. You don't have that sword today, so we'll see what happens.
But here's what I know. You don't have a sword.
No, I am just at the listen, I'm here to serve the Queen. I'm here to bring her great analysis and a great pick and respect every bit of it. Emily, how you doing today?
I am doing great. How are you guys doing today?
He went to get his sword, didn't he?
I did. I still have a sword. I'm just warning you.
He had to go get his sword.
All right, go do it.
We'll be doing some
court. Let's go.
We'll be doing some chopping a little bit later in the show. Hopefully not. Hopefully both picks can just get through and we're great to go, but we'll see. I do want to start with a couple things. Number one, if you're out there and you are watching, make sure you're coming in the way we always do. Hashtag Team Tackle right in the chat. Get the conversation going. I love watching those conversations and chat back and forth. If you're brand new to the channel, click subscribe. Click the bell. We do this show every day. Whenever the markets go live, we go live 12:30 p.m. Eastern. But Matt, before we do anything, I want to talk about our podcast we did yesterday. We had Coach Keith King, the Godfather, back on the podcast, one of our favorite human beings on the planet, a mentor to me and you over the years, a man who's been in the markets for decades. He's got great wisdom. I thoroughly enjoyed sitting down and hearing Keith talk about old stories from the floor and talking about what's going on in the market right now. It was just a really great conversation, quite frankly. Talk a little bit about the podcast.
Well, I all three of us, I think, would consider old Keith a mentor to us in many regards, and it was an absolute pleasure to bring the Godfather back into the podcast yesterday. And honestly, you know, we had a great skyline with him. You were handling the interview with Keith in the feature, and I was just sitting back, and it was a good 45-50 minute interview. Easily could have went 2-3 times more than that. In fact, I was like, Tim, we got to cut it off. This is going to be a 3-hour pod. We got to go. But no, it was one of those interviews, Tim. It was just two traders talking shop, getting updates, talking about the news that's been impacting the markets. And, you know, somebody with Keith's experience being a floor trader for, 20 plus years. I know that man. I don't even know the number anymore, but I think it's close to 30 million total transactions under that man's belt in his career. And so he's, like I've said many times about people like Pete Thomas and Keith King, when they talk, it's time to listen.
Yeah.
And that's what I had the opportunity to do tomorrow during the actual podcast. And I thoroughly enjoyed it. Felt the conversation was absolutely on point, and hopefully the community and people out there in La land enjoyed the interview as much as I did.
And if you're out there, you're a veteran, you know Keith King very well. I mean, he is now semi-retired, as he always says. He's never going to be fully retired, Matt. He works too much. He loves it. He loves being busy.
Semi-retirement is his way of saying, I'm going with the grandkids.
I'm still hanging out.
Don't call me.
That's right.
Yeah.
That's exactly right. And we even had some fun at the end of the show asking Keith some trivia about Boston.
No, we didn't. We didn't have fun. We didn't have fun. Nobody had fun. There was no fun to be had. I'm used to dominance in those games. And I like for a moment, Tim, I was like, is this what Tim feels like?
Yeah. It was a total beatdown.
I need to recover. I am not used to getting annihilated in games. And
but Tim still lost anyway, right?
Of course. Of course.
That's what
his annihilation was with me.
It's true.
Keith, again, you're playing a game of all things Boston, but
yeah, you're not gonna win.
You dominated. No, definitely, guys, check out the podcast. It was a really, really good podcast, and hope you guys enjoy it.
Yeah, you can find Trading Justice, by the way, on any of your favorite podcast apps. It's a great one to listen to this afternoon. I'm going to tell you, you guys are going to really love this one with Keith. So go check that out. I dropped a link in the chat. Let's get down to business here, guys. Let's get down to the markets, have a conversation. Obviously, yesterday we had the nice rally to start the week. Here we are somewhat extending that rally, but there's not really a lot of price action in some tight ranges on these indexes, Matt. I'm looking across. Yeah. NASDAQ's looking really good. Obviously, the breakout yesterday was so gorgeous. S&P at an all-time high. Nothing negative about the market, but it's a light range day on a Tuesday following Monday's rally.
Well, and it's also a 3-day rally on the backs of probably practically nothing as well. So a little bit of a doji on a Tuesday following a breakout, I don't think is too much cause for concern out there. But that's exactly what we're staring at here today. We're staring at a lot of nothingness in the market from a broad market perspective. Doji in the S&P 500. Not a lot of overnight action to really even discuss there when you're taking a look at the other indexes. The Dow Jones, obviously the concern here was the violation of the pivot point on the right shoulder at 35K. Very significant hold number, similar to the S&P, found support on the 50-day moving average. But now you're in that recovery between the 35K and the 35,500. I don't think there's anything here from a technical perspective outside of all the bulls in the world just appreciating the fact that yet again the 50-day moving average held in the broad market. But outside of that, you're basically just recovering the drop you had last week. I think very similar to the breakout of 35K. I think you are waiting for any type of update. There's always trading to be had, but in terms of more bullish, you're talking about the breakout at this point. You're just too tight against that breakout channel, so that's what you're looking at in the Dow Jones. Within the NASDAQ, obviously the NASDAQ, one of the highest rated, the highest rated sector of tackle trading, along with the healthcare sector specifically. In the NASDAQ, nice breakout yesterday following the same 3-day recovery we had in the broad market. The difference is in the S&P and the Dow Jones, you were looking at more retracement analysis. Now you're looking at breakouts. In the NASDAQ, you got to like the NASDAQ strength yesterday. And with not just the 3 days, but the size of the candles, the size of the candles are pretty big. The momentum is growing. Again, I'm not saying that the price action's done for this week, but I kind of feel the traders are waiting on Jackson Hole at this point.
Yeah. You got the Powell testimony on Friday, not testimony, It's just a speech on Friday. And I think everybody's kind of been eyeing that.
Well, think about it. The major markets all moved yesterday. Mm-hmm. What didn't move at all yesterday? The bond market. Bond market is obviously waiting on Powell later on this week. Stock market after a 3-day rally. There's a lot of positive Chinese news over the last 12 hours, but I really don't think that had an impact on our stock market today. But after a 3-day rally like this, you're a little bit overextended short term. You have some major news. You could see a little slowing momentum in these candles as we navigate Jackson Hole this week.
Emily, I have the same process I approach markets with every day through my routine. And days like this, it's pretty simple management. You go through, you manage cover calls, you just kind of update things, look at your watch list, look for a few new opportunities. Pretty good day in the markets for a trader that is approaching it like that. Are you still kind of going through the same process? You are focused on cash flow. Are you now getting more directional? Where are you at right now in the markets?
I just have to say, I think the market knew I was kind of like, on a semi-hiatus where I wasn't really doing a lot of directional trades when my parents were here. And it just so happens that when they left, the market wakes up. So I am shifting just a little bit.
It's all about me.
It's all about me. It's always about me. I'm so happy that the market waited for me to, for my parents to leave. And now I can start, really focusing on some directional trade, especially now that we have a little breakout here going on. So still obviously mainly cash flowing, but I'm getting a little itch to get directional, which is not bad.
I got a pick for you later today.
Okay.
Healthcare.
Ooh.
Right.
Thought
about gold.
We'll see.
But it is healthcare. So hopefully I can get you on some directional stuff later today.
I've got one as well. I think you might like.
It's certainly not as good.
We'll see what happens when we dig into the analysis. But I'll tell you, I felt that way a little bit, Emily. Obviously, whenever things go from a period of, kind of lackadaisical, markets were back and forth, you pivot off the 50, you start running. Traders are going to take note, and that's where we are here today, just kind of extending that little bit of a rally. Matt, you highlighted that NASDAQ. Obviously, the Dow is kind of underperforming. The Russell's just back in the middle of that range. Anything else you're seeing that you want to update the team on?
No, I mean, honestly, on a day where you're not seeing a lot of price action, you really didn't see patterns change. Momentum really hasn't changed from the previous 2 days. From a broad market conversation perspective, there's just not a lot to update. The Russell 2000, yeah, I mean, you held the ground again at 2100. That's cement at this point. I mean, like we talked about at just a couple of days ago, you got to like that zone, but you don't like the zone at 22.21? Like, that's not cheap risk anymore. So you said it accurately. On a day like today, yeah, there are trades to be had, but for the most part, after the price movement yesterday, you're just navigation today.
Yeah, I think so as well. All right, let's flash through the commodity market next. We'll talk, some individual companies a little bit later in the show. Got some interesting stocks. I do want to look at FXI at some point as well, talk Chinese stocks. But let's talk commodities first here, man. This is now 2 days of crude rallying very, very sharply up off of that little pivot point that it put in just on Monday and confirmed. What are you seeing here in crude? Now we're coming back into some pretty important price levels, quite frankly.
You are, and I do think it's fairly interesting, the size of the candles. My personal expectation was for a retest to that 60. I think a lot of traders were expecting a retest to 60. The market didn't want to do that. The market saw this support level at 62 and they said, we're firing here. But that's not the interesting thing to me. That's just where support's going to form, right? You're not looking to buy the dip. You're looking to wait for the pattern to develop and to give you a constructive technical projection. But what's interesting to me is the strength of the movement over the last 2 days is very, very interesting. As you drilled into the 9 EMA, showed a little bit of hesitation yesterday, continuing the momentum here today. Yes, I know the candle's slightly less, but that's the same type of momentum you're seeing. You broke back up above 65. You broke back up above the 9 EMA. Which is not a small feat in a downtrend that has momentum. Remember, the 9 EMA is a major momentum-based indicator, and when you go right back up above it without even a challenge, that's a shift in mentality, in my opinion. And so now you're still bearish. You still got to pivot low. But I do think with the strength of the last 2 days, with the importance of the backstop that we've been talking about on both energy and crude oil, you're seeing a little bit of confidence and a little bit of drive up in price here. Again, I don't see an actual position yet, but it's close. It's closer than it was a day ago, and it's closer than it was 2 days ago. I still think because again, you still got lower lows, lower highs technically. That is still a bearish short-term downtrend. Mm-hmm. Let's see how it navigates 67. Let's see how it navigates the downward moving averages. But more, I don't know about you guys, but the number one thing I would love to see here, because I'm kind of in a wait and see approach here with crude, I would love to see a double bottom here at 62, 62 and a half. Like I would love to see that.
Double bottom would be fine. I'd also be very, very happy with a consolidation around 70 for a couple of weeks, then break back above. So
you give the gold consolidation, 4 or 5 day consolidation, break back above, absolutely 100%. That'd be bear stop out day, and we all like bear stop out day. Mm-hmm. So that would be an appropriate setup there as well. Good catch on that one. But for the most part, I do think you're looking at this saying, okay, now I'm going to look at it every day and make sure that I'm ready to rock and roll when the pattern emerges. Mm-hmm. That's what the last 2 days are telling me. It's a shifting character on the backs of a fairly consistent downtrend, especially over the last 3 weeks. You know how much I like shifts in character from a reversal perspective, and so let's see it play out. But I do think it's in the zone where you're like, well, I'm getting interested.
Sure. Yeah. And XLE is improving a little bit, but it still needs a lot of work itself as well. Obviously crude stability is going to point towards longer term health in that sector. So
right cover calls in energy until it gets better.
I was just thinking with
that's
my
the
ExxonMobil.
playbook for 10 straight years.
That's the plan. That is the plan. All right, let's move on then. Let's go on to the next commodity. Let's talk gold. You were talking about give me that gold setup. Let's take a look what's going on with gold here today. It had a nice little rally. Now we're bumping into the 200, Matt. There's a lot of congestion here on the left of the chart. It still may take some time. You got to love what happened yesterday. But what is your read here now?
Yeah, and again, you got to like what happened yesterday. It is constructive. There's no doubt about that. You broke up above all the moving averages, the 9, the 20, and the 50. I do think that's positive. Obviously, the 208 moving average is playing a role, but it literally, I believe you asked me here, 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 and here. And I said, well, what you're going to want to see is you're going to want to see it get back into that 1800 to 1840 zone. And I do think the directional action starts with the breakout of 1840. Mm-hmm. So I think you're back into I like gold now. And I will tell you this, Queen's Court, I debated for a good 20 minutes in my own head, Emily, this morning, whether or not to make a minor stock my Queen's Court pick. And I was looking at two stocks specifically. Okay. I was looking at gold. Mm-hmm. And gold is my favorite fundamental mining stock. Okay. Well, I go back and forth between Newmont and gold, but I love them both. They're sixes to me. It's like you had twins. They were identical. You love them both equally, that type of thing, right? From a fundamental perspective. From a technical perspective, there's going to be some differences between Newmont and gold, but I do like gold technically a little bit better than I do Newmont. And I was looking at gold here today and just basically saying, I like what's happening with the raw commodity, right? I like the fact that we had bear stop out day yesterday. I like the fact that we're back into the range of 1800 to 1840. The metal mining stocks have been under pressure and just absolutely annihilated over the course of the last couple months. But you're coming into a very similar zone in the metal mining stocks that you saw with the bottoming price in February and March. And I'm looking at this support level over here. When you look at it on a weekly chart, and I don't know about you guys, but I love, even though I love trading breakouts, I'm not sure I enjoy anything more than bottom fishing for value. Mm-hmm. Mm-hmm. I think when I get a chance to go deep sea fishing and try to find some real good value, like that's where I just enjoy it the most, because
everybody loves it.
Fundamentals and technicals and opportunity and all of that. So I was doing a little bit of that in the metal minings today, and there's still a lot of trash out there, and that was one of the reasons why I came back off it. But I like the zone that you're starting to get into with gold here. You couple that with the look at GC, and you saw GC pound the table 2 weeks ago. I mean, just pound the table 2 weeks ago, coming into that very similar support level. Gold being that algorithm type 24-hour instrument powers off that support level a good 107 points. 107 points over the last 3 weeks, right? Gold has recovered. Metal mining stocks have not yet. And so you're seeing the front running behavior in gold. I like gold getting back into the 1800 to 1840 range. And if the movement in gold is legitimate, especially with bear stop out day yesterday, you're looking at those metal mining stocks that are all 3 weeks trailing the price action in gold and the recovery in gold. And so I see an opportunity here in the gold mining stocks. And I was looking at, you can see it on GDX as well, but I was looking at gold here coming towards the lows. Remember, this is where the gold futures contract was 3 weeks ago. This is where it is today. I kind of feel like we for anybody that missed out on the front running of gold, which was practically everybody besides algorithms, they might have that unique opportunity in the gold mining space. And so I was looking at that, and again, I like that one. And then I was looking at AUY, Yamana, same type of analysis, real simple trigger above right here at 4.5. So I got close. I got real close because I just like the analysis of the gold recovering, front running those metal mining stocks. Those metal mining stocks all pounding support right now, with what I assess as some fairly decent value from a fundamental perspective. Cheap risk. I just didn't get there, and the reason I didn't get there coming to gold is I just wanted to make sure that that bear stop out day was legitimate, because if the bear stop out day is not legitimate, those metal mining stocks can crash support. And so I just felt like needed one more week. So I'm willing to bet if the analysis is true, Queen's Court might have a gold stock next week. But for this week, didn't get there.
All right.
It's
Great
cheating.
analysis. Love it.
He's cheating right now. What he's doing is he's laying out how much thought and care he's put.
If you want to call good analysis cheating, you do whatever you need to do, buddy.
He's trying to make sure he doesn't get chopped
If you
later.
want to act like preparation and analysis and care about the message that is laid out there is cheating, then let's label it cheating. I will wear a dolphin hat called cheater.
I do like the gold analysis, and I would love to see if it can be there next week, because that means gold has developed in a way that we're looking for. And it does need some work still, so there's a reason why we're still waiting. Gold down at $20 though, it looks pretty attractive. And you're right though, back to one of the thoughts you had earlier, everybody loves digging into those value stocks that you've already kind of done the research on, and it's on your watch list. When you get good prices, Matt,
especially in an industry that you just enjoy analyzing.
Yeah.
I just enjoy analyzing gold stocks. It's fun. It's fun diving for value.
100%. Yep.
I gotta tell you, that naked put on gold at 18, not too shabby.
200 weekly moving average. I kind of like 19 ownership too, though. So I don't know. It's there's some debate on how you'd play that if you want to approach it.
I don't like a naked put at 19, because you're basically, and let me lay this out, because I do understand, right, that when you're looking at this, you would first be, well, maybe I sell naked put. If you sell naked put at 19 is kind of the area where I feel comfortable as a support level. If it goes to 19, it most likely means gold came back down underneath 1800, and that would throw off the reason I like it. So I do not like a naked put to entry here.
Because if it's down there, you're getting a sign that means there was a problem, and that makes sense. Yeah. That does make sense. Gotcha. All right, let's keep moving. Let's go on to Bitcoin next, if we can. Last one, just update on this technical chart, Matt. Are you seeing anything here as it's hesitating around 50K? It is, stalling a little bit.
I don't think you're concerned with the breakout until the 9 EMA is beaten up a little bit. And 3-day rally, market hesitation. You do have the $50,000 significant hold number. No, it's not a known resistance level. It's just a significant hold number, and those do absolutely play a role. But I kind of feel this is the same 3-day little hesitation that the market is having as well. I don't think there's anything concerning. A couple different things. Number one, it would not surprise to see 48,000 hold. That's kind of the pivot point in the breakout channel. You also have, now that we're in that trending condition, you see the pivot point there. You could also see a 9 EMA play as a support level, but downward movement in price, obviously throwing a little bit of cold water into that journey up into that 58 to 60,000. But Bitcoin's going to have down days in upward movements in price from a trending perspective. And until it violates a support level, which it is not yet as of today, it's just a down day, I don't think there's anything to be concerned. You don't like to see it because you're testing support, but in a position, you don't like to see anything test support.
Yeah. No, but here's the thing. We're still above the 9 EMA, like you're pointing out. That's the lightning. We're still riding the lightning. I mean, the trend is intact. Let's not overthink it until we see some new development. That's right. I do want to talk Chinese stocks, though, FXI, if we can, Matt. Probably the last one. Then we're going to get into stock talk. Obviously, we've had a nice little fire off of some support down here. Bottom basement prices, in some people's opinion, depends on how you see it, I guess. Prices can always go lower. I know that we're getting some of the better valuations we've seen in some while. 10-cent Holdings announced a buyback program. JD.com was scooped up by Kathy Wood. I'm seeing headlines here and there. What's going on in China from what you're reading, Matt, out there?
Well, over the last 24 hours, there's been a couple stories that have come out. Number one, maybe there was a little bit of maybe too much paranoia regarding what China is doing regarding regulatory measures. That was put out there. I forget the individual, so I apologize for it, but it was put out there by some fund manager. Kathy Wood then announced that she went out there and bought JD.com. I will save my commentary about JD to the podcast next week. But that was on the backs of an earnings numbers that they were okay. But for a tech space with Chinese components and influence, and you're a growth stock, I probably want more than 45 cents against 41 expectation, and a 38% increase in revenue year over year for an online company in a pandemic. I'd probably want more out of that fundamentally, quite frankly. But there was the news story that Kathy Wood bought JD.com. To me, and obviously, FXI specifically fired off yesterday. I got all of these news stories wrapped up into one simple thing. FXI is at a major support level. The U.S. stock market went gangbuster yesterday. The Chinese market followed it. That is all that happened yesterday. And anything more than that is made up nonsense.
And quite bluntly, I'm still not a buyer. I still see the headline risk. I see what's going on. I understand arguments.
I've seen so many reports say, did we oversell China? Did we oversell China? No, we have not oversold China. We don't understand what's happening in China. Nobody talking today understands what is happening with the regulatory measures in China. That's the problem. It's a variable that can change at any moment. It doesn't mean price goes straight down. But really, Bob is a buy based on what?
Nothing.
Nothing. It's up 5% against a backdrop of it going down 20 in the last week and a half.
The only thing you can make an argument on is valuation metrics relative to historical levels and stuff like that. That's not my argument. There's still too much headline risk in my opinion, and we're still in a downtrend. You see it in the chart. And here's something out there if you're listening and you're kind of new to the market. Sometimes you'll get wrapped up in BABA's up 10%. You see these headlines. China's up 7% today. China's up. It's much easier to rally big off of really big sell-offs. Those are the biggest days in the market historically. So yes, getting a nice fire-off support.
Ask me the question. Come on. China or the US? Ask me the question.
No.
Come on, ask me the question.
Not even going to ask.
You love asking. You love asking.
China or Europe?
Are you kidding me? We're going with China over Europe. No, I kid. I kid.
China or the US?
It's not close every day today, every day tomorrow, every day in the future, every day for the rest of my life. It is the US market over China. Yeah. There are moments in time where China is going to be pushed to the forefront. Yes, these moments in time typically happen where FXI is personally at from a technical perspective.
Sure.
But we're also talking about an area of the market that is down extremely big over the course of the last 3-4 months in the face of some very big uncertainty out of China. I personally think if we're value hunting, we value hunt where we don't have to deal with international nonsense right now.
I agree.
Keep it simple.
Keep it simple right now.
I'm looking at a 15-year chart on the FXI, and we're at the same level we were a decade ago. And
because you're looking at AT&T, but people get all geeked out over China. It doesn't do anything. There's pockets of time.
Yeah, I agree. All right. It's been all over the news. People bargain hunting. I get it. Kathy Wood, she does anything. She's going to make the news these days, Maddie. It's the nature of it. Let's move into stock talk next then. Earnings roundup first. I got a couple of other stories. Then we're going to play Queen's Court. I know there was a few names out there, Matt. Best Buy grabbed my attention. A few others.
Well, let's
go.
Yeah, it's going to be a quick Queen's Court, not Queen's Court, but earnings roundup here. We got 3 companies. I'm going to start with Paulo. Alto networks firing off here today. You see the daily price action gap out. Look at that consolidation over the last 6-7 months. Gap out, run away from that. That is technically called a breakaway gap. Breakaway gaps have a tendency to start and continue new trends. So keep an eye on that, especially as this weekly chart, weekly charts really starts to solidify itself. But from a charting perspective, Gap run probably ran way too much for any type of trade right now. But like Palo Alto is absolutely on a watch list. Now, going on that watch list is more from the technical response and couple that with the weekly chart, because their actual raw numbers were okay, but that's about what they were, was just okay in my opinion. They came in at 160 versus the 143 expectation. Revenue came in line at 1.2 billion. That was the expectation. That represented a 28% revenue increase year over year. They're gapping up on commentary over their guidance. That's kind of what is driving the price. But when you look at their guidance, they had some very mixed guidance, in my opinion, mixed on EPS versus revenue, mixed on quarterly versus yearly. There was actually a little bit of misses within that guidance and a couple increases. And so, but that's why it's firing off. I do have this report as a mixed report, but you gotta like the firing off action. It is one of those situations where when I look at an earnings report and the raw numbers don't support the price action, I want to go in and look at the commentary and see what was said from a future expectation perspective. And so I am interested in that, but I do think Palo Alto Networks is, number one, is one of our favorite in this space, but also that weekly breakout. You know, whenever you see 6, 7, 8 months of consolidation, as you've seen in Palo Alto, you see that weekly breakout. Well, a lot of times you see price appreciation. You see a prolonged consolidation, broke out on positive earnings right here. I'm not saying it was 160, but it was 162 last time. You break out on positive earnings. What happened the previous weeks? You saw a market go from 292 up to about, we'll go to the base at about 370. Not calling the shot here, but you do have some good price action breaking out on that weekly chart, and you do have a history of breaking out on positive earnings where you see price appreciation. So definitely a radar, definitely a watch list, but most likely driven too much after the gap in the run to chase price here. Wait for a secondary pattern, in my opinion, but patience could pay here.
Yeah, one of my favorite in this space, like you talked about. We love Palo Alto in the cybersecurity place, but that's just a huge, huge gap and run. What do we got next?
Medtronics, healthcare space, testing a breakout very similar to Palo Alto earlier today. It was a no-sell day about 45 minutes ago here on Medtronic, but seeing a little bit of profit taking over the course of the last 30 minutes or so. You see that form that bullish retracement on an intraday basis. I don't think that's too surprising or shocking. I actually kind of like it from an intraday perspective. Now, looking at this from a technicals, I'll give you the breakdown on the raw numbers here in a second. Tested the breakout channel. Very similar type weekly consolidation. Keep an eye on that 132 handle. You close above that. That is called weekly confirmation, and typically in a fairly decent position when you close above weekly channels. Closing above weekly channels, price appreciation. Close above weekly channels, price appreciation. Close above weekly channels, price appreciation. Close above weekly channels, price appreciation. You see the historical data there. So we're looking at that 132 handle now to the actual raw numbers. 141 versus the 132 expectation. Revenue came in at 8 billion versus 7.9. That represented a 22.7% revenue increase year over year. Guidance for Medtronic was maintained, and so they didn't really make any adjustments to their guidance. There was a slight increase in EPS guidance, but it was trickery. We're going to call it trickery. They increased 5 cents within a 15-cent window on the bottom. That is always trickery. So technically a beat and a cheat here, Medtronics. Get your act together. But still, good company, healthy company. Looking at that weekly breakout. Got to close here, though, and then the fireworks can begin.
Sure.
And then last, certainly not least, I already talked about JD's earnings a little bit, but let's end on Best Buy. And in my opinion, Best Buy had the best earnings numbers over the last 24 hours. Best Buy comes out today and does a 298 versus a 191 expectation. Real healthy beat on EPS. Revenue came in, I wouldn't say hot, but above the expectation, 11.8 versus 11.5. That represented for the brick and mortar company 19.6% year over year. They also had a traditional increase in revenue and EPS guidance. So technically, real good beat on EPS numbers, good guidance, decent revenue. This is a hat trick out of Best Buy and a legitimate hat trick out of Best Buy. I'm not really looking and caring at that wick right there. Best Buy, real good covered call stock. If you're looking for cash flow out there, guys, specifically in retail, Best Buy is one of the better cash flow companies in the retail space. Got good fundamentals behind it. Now you're looking at it, perhaps a weekly breakout outside the 125. Let's just give it a number. I'm going to give that number 124 to 125. Looking at that as a resistance level. This is a cover call, darling, until it breaks out. Close above 125. You're probably opening up that risk graph a little bit.
Best Buy kicking up here, getting interesting right near that longer term channel.
Good report out of Best Buy. Good report.
It's not been on my radar for quite some time. So yeah, interesting.
Well, start writing those cover calls. Get ready for that breakout.
Getting back into it. I like it. Get back in the swing of things, Best Buy. All right. Only one other story I want to add, and then we'll play Queen's Court. Disney, we gave the news yesterday that everybody in the world gave the news. The FDA approved Pfizer's vaccine. Disney announced later in the day they reached a deal with their union workers in Florida to have everybody guaranteed that they get fully vaccinated by October 22nd. I think you're going to see this storyline quite a bit in the coming weeks and months as corporations make deals with unions, as they mandate this. I think you're going to see this over and over, Matt, quite frankly.
Yeah, especially with FDA approval. You know, that was kind of that last stepping stone. And you're going to start to see first corporations. I don't think government wants to do that as of now, but first corporations, they're going to start mandating this much, much, much more now that FDA approval has actually occurred.
I agree. And I said one more.
And honestly, I honestly believe it's kind of a non-market story.
Yeah.
I don't think the market cares if Disney forces their unions to get vaccinations.
Yeah, that's correct. Well, I said one more. I actually got two more. One last one, Starbucks. And I want to short Starbucks just on general principle alone based on this story. Matt, what day is it? What month is it?
Tuesday.
It's summer. 24th.
Is it hot outside? Is it summertime?
Hot.
So the leaves aren't changing and it's not fall weather. Well, Starbucks is
they Christmas this in July?
Apple crisp macchiatos, pumpkin cream cold brews. They're just pumpkin spice lattes. They're starting at a month earlier.
Christmas in July, too soon. This is just a massive pet peeve of mine and drives me absolutely crazy. Can't we wait till the holiday, one holiday ends before we start marketing every holiday? Can't we
in the moment
get through?
Last I checked, the beaches are still open. People are still going to the beach.
It's not even Labor Day.
Umbrellas. Exactly.
What are we doing?
Wait a little bit.
Starbucks, you got to wait till people can't wear white. Let's go.
I agree.
Come on.
That should be the minimum standard.
I can't believe I even know that. That's offensive. I even know that. I think I saw it on a TV show one time. Or Obama got criticized for wearing a 10 something. I can't remember how I know that. But Starbucks, get it together. My consumer, I won't go to Starbucks from now on. I'm done.
I've got a month-long protest to Starbucks. At least I'll come back when it actually is fall. Starbucks, absolutely.
Can we at least have one leaf change?
Can we at least break out the sweaters first?
It's summer. It is still summer. Period. It's still summertime.
My kid,
the NFL hasn't even started.
My kid doesn't even go back to school until next week.
I know.
Oh my goodness, Starbucks. They must be really hurting for that bonus money.
Dude, people like those pumpkin spice lattes. I get it, but you could wait. You could wait. All right, let's play some Queen's Court. This is a segment we do each and every Tuesday where coaches who are here on a halftime report bring a stock idea, an investment idea, a trading idea, whatever it is they feel like they want to pitch to the Queen, some kind of opportunity or concept. And Queen Emily here, the head of the Dynasty Investors Trading Lab at Tackle Trading, head of the Women in Trading Group, she gets to judge whether or not it's good enough or bad enough. And if it's not, she chops their head off. Queen, where do you want to start here today?
Well, I'm kind of scared with Matt over there with that sword, so I think I'm just going to have him go.
It's intimidating.
We'll have Matt go first.
Yeah, it's a wise choice. Oh man. Sometimes I wish I did live 800 years ago. Okay, let's go ahead and let's go with my pick. So, like I said before, you know where kind of my head was at, but I really think we just need a little bit more time just to really solidify the gold space, especially with GDX. So what I did do though is we all like healthcare, correct?
Mm-hmm.
Yeah.
Like everybody likes healthcare.
Top-rated sector.
One of your favorite economic stats is the increasing percentage from a GDP perspective that
I love
the
that.
healthcare space has. It's one of your favorite stats. Can you
That's
give that
right.
stat, please?
Yeah, when I was born, in fact, I was telling Coach Keith about this yesterday. You know, I studied this a couple of years ago when I was reading an economics book. And when I was born in 1979, the GDP percentage that the healthcare sector represented to US GDP was like 7, 8, 9%, something like that. 8%, let's call it. Today in 2021, it is 20%. 19%, somewhere in there, and is projected to go higher over time. The amount of money that we spend on healthcare is a lot. It is a huge part of our GDP. It's expanding and it's not going away. There's a reason why every parent in the country, if their kid says, I want to go into healthcare, they're like, yeah, you'll get a good job. I mean, that's like the instant, you'll always have work, right? You have stability because it's a growing sector, and not only growth, but also as an expanded part of the economy.
100%. Thank you for that backdrop. So my pick today was, I was looking at the healthcare space and a pick that I really, really liked from a combination of short-term plus intermediate term, swing trade, position trade. I like it as a position trade, but the company I'm looking at is a healthcare company, healthcare plans, and that is United Health Group. And what I like about United Health Group is a couple different things. Number one, let's start with the technical analysis. First and foremost, in recent history, last Thursday, you officially did see a breakout on both the daily and the weekly time frame. And so when you go out to the weekly time frame, what you're going to see is a little bit of a cup and handle type technical formation, which is a extremely good continuation bullish pattern. When you see the breakout of that continuation pattern is typically when you see what we call a traditional leg in the market. And that's when you break out and run and see a traditional leg up in the marketplace. You see this in recent history, breakout on the weekly chart outside of consolidation. What occurs? Next 7 out of the next 8 weeks, up. So weekly consolidation breakouts are extremely powerful. I like this one even more than the previous one, because when you were looking at the previous breakout here, you had ran from the very, very lows of 320 all the way in 4 consecutive weeks coming into that 365 handle. You eventually break out of 365 and then you run up into that 420 handle. And so you got about a 60-point range on the breakout. But again, you did run from a very deep distance here and you still achieved a good 60 points on the breakout. Here you have a more traditional cup and handle technical formation on the weekly chart. And what I like about this is, unlike the MW formation we saw on the previous consolidation breakout on United Health, what you're seeing is a cup and handle where the distance you're running into the breakout isn't already, once again, going from 320 all the way to 360. It's not a 45-point movement going into that. What you have is you have a 15-point movement going into the breakout. And so I like the distance, and that's because I like the pattern a little bit more. This is more of a traditional WM formation where you could see a breakout either way. It's a longer term K trade type scenario. Whereas this, you're only looking at that resistance breakout. You got it last week. Now let's go on to the daily chart. A lot of times when you see that breakout, what will occur is it will establish a higher level of resistance on the daily chart and reset the daily chart to give you another opportunity. We call this a Cody special, where you have that quick snapback, come down, retest support, confirm before you start that weekly opportunity where it's up. So I like the combination of analysis here from a day trade to a swing trade. I do like both time frames, but I do like the position trade because it's United Health, and the type of analysis I like the most is that weekly chart. Now, when I was looking at this I'm certainly looking at this from a directional opportunity perspective, because the combination of the daily and the weekly strength from a technical perspective. Cash flow, you can cash flow United Health, but you could have been cash flowing United Health any way you wanted to for the last 8 months too. We're talking direction here. And so from a directional perspective, I thought, and where volatility is in its cycle, you really don't have volatility concerns. You're looking at implied volatility at 26, 21, just not a lot of concern there. And when you look at volatility around the 20 level, you could easily just go out there and buy a call option and be perfectly fine and not even worry that you're paying too much of a price. When you go to the at the money call option, and I'll go out to more of a traditional time frame, 115 days here. When I go to a traditional at the money call option, we're only paying about 4% of the equity price, maybe 3-4%, which is nothing, which is absolutely nothing. However, here's earnings. We are 6-7 weeks in front of earnings. And what's volatility do typically as we get into earnings, YouTube?
Is slides. So you're at this point in the volatility cycle where you've already had the volatility crush. So it's not going to be at an extreme, right? It's going to be at the lower part of the chart, but it will fade for a while and then eventually build into it at some point.
But we're not in the fade analysis. The fade analysis is all over here.
Sure.
Right. You're into the building of volatility analysis. This is where you like straddles. This is where you like strangles. You have volatility fairly low at 21 right now. More than likely, you're going to see volatility go back up into the 30 handle as we approach those earnings. Mm-hmm. What that means is that even though you can still go buy a call option, I probably want to offset that a little bit and sell something against it. And so you are very easily can go out there and just buy that 430 call option, pay $17.80 and be perfectly fine. You are not paying too high of a price, right? You're just not. You're paying less than 5% against the equity price for 115 days on a contract with that volatility at 26%. You're perfectly fine. Again, I just like bull call spreads when you're talking about a stock at 424, where you have some volatility that may increase over the course of, not a lot, just may increase a little bit over the next, 4 or 5 weeks. And so from a technical perspective, here's what I like. I like the breakout. I don't need to recover that. I like the breakout. I like the candle confirming it today on the Cody special on the daily chart. Here's what I like. I like a stop loss underneath 420. Cheap risk. Mm-hmm. I like a stop loss underneath 420. I like a target in the 470 to 480 range. And I couple that with a little bit of potential average yield plus an analysis on the breakout and how far it can run on breakouts. And so I got a 470 to 480 target. I got a stop loss anywhere under 420, but you could easily put it underneath that 20 SMA on the weekly. We know how much Mark loves the 20 SMA on the weekly. Mm-hmm. You can easily just manage that stop loss underneath the 20. As long as it stays above the 20 weekly, you're fine. But when you're looking at from an option perspective, here's the pick, my queen. We're looking at buying the 430 call option, 115 days to December. We're looking to sell the 470 call option. So we're looking to offset our $17.80 by bringing in $5 of cash flow. Now, I don't feel that 470 call option is going to be called out. It's most likely going to be worthless once December hits, but we're most likely managing this trade before that ever even gets there. Okay. So again, I like the breakout. I like the coupling of the analysis of the daily and the weekly chart. I like a bull call spread, 115 days out in December, buying the 47 delta 430, selling the 470 call option with the 19 delta. Now, one of the reasons I chose 430 and 470 instead of 420 and 460, which would be more traditional, is I wanted to sell the 470 call option. That's my target. I wanted to sell that 470 call option. And so just to make the deltas work, that forced me to do a 430 instead of a 420. And that's, and for those of you that know rules based on delta, that's all I was doing there. So once again, the technical analysis is a weekly breakout coupled with a snapback on the daily. The strategy on United Health would be a bull call spread with the stop loss anywhere underneath 420, target 470. The actual trade would be a long 430 December with a short 470 December. That is my pick, my queen.
Well, thank you very much. I will let you know my thoughts after Tim goes.
Sounds great.
I'll talk to my sword as you think about it.
Whispering sweet.
I can't. I got to give it a name. But go ahead, Tim.
Listen, if you're gonna have that sword in your office, you at least have to watch a few episodes of Forged in Fire and see how these men make these swords.
I watched Rome. I'm good.
There you go. We're going to stay with a theme here today. UNH, obviously a really, really good candidate. Healthcare is our top rated sector. This one's in healthcare plans. I'm going to go into a different area in healthcare, though. We're going to go into medical devices. You know, Medtronic reported earnings today, had a nice little fire off response from it. Obviously, MDT is looking at an overall long-term breakout. That one caught a lot of people's radar. That one easily could have been a pick here today, but it's not the one that I chose. I chose something similar in this sector and industry, and I went with a company called Boston Scientific. And Emily, you've been in our community now for quite some time. You remember the Tackle 25 over the years. BSX was a regular, member of the Tackle 25, I believe, through 2017 through 19. Might have even been before that. Matt, I have to go back and check the tape on that. But I know we removed.
I want to say Boston had 4 years.
A 4-year stretch.
It was there for quite
It did not get removed for fundamental reasons. It got removed because there were better picks.
That's right. It's about just really, there was a lot of strength in this area. And I remember these conversations Matt and I have at the end of the year. Matt's finalizing the list. We're all analyzing this data. And it comes down to, well, this one or this one. And it really, some of them are tough calls. It had to get removed, but it's still a very, very sound company.
Boston had some short-term fundamental issues. Right. But there wasn't anything concerning. They'd had some valuation concerns. And even though I feel like that valuation is going to solidify itself over time, there was better fundamental picks in the space that you could do cover calls on that didn't have that concern. So yeah, it wasn't anything too negative against Boston though.
Yeah, that's right. But with that in mind, though, I do want to start with some of the drawbacks here before I start focusing on the things that I like about it, because there's so many things I like. I'll just get the bad news out first here, Emily. It does have a pretty high PE ratio right now. This is a medical device company that obviously is dependent on new orders, new purchases, hospitals picking up devices, all that kind of stuff. They don't make any equipment that deals with COVID. So think about 2020. So here are these hospitals around the world scrambling to try to treat this disease, this new thing that's out there that has become the focus of everybody. BSX, they had their revenue dip a little bit here. So the particular nature of this company's products, it led them to a down year in revenue and a down year in sales. In fact, 2020 revenue was down to $9.9 billion, down from 10.7 the year before. Earnings came down quite a bit as well. Those year-over-year comparisons brought the PE ratio to where it's now at an extreme level, 120. I'm not as concerned about that as maybe the headline of that is going to point out for a couple of different reasons. Number one, it's a $60 billion company I've been tracking for the better part of a decade that just does revenue every year. And their revenue projections moving forward are back into pre-pandemic levels. They are improving. In fact, I went back and I reviewed their most recent earnings report. They increased guidance, reaffirmed it, and said revenue will be in line moving forward. So I do want to point that out. PEG ratio currently is high. PE ratio currently is also high. Forward metrics on those, the forward PE, I believe, is 23 right now. So for a medical device company, as this thing gets back into its regular normal operations of business, which it's currently doing, by the way, I think you're going to be fine from a valuation perspective. Now let's focus on the good parts here. Number one is, Matt, give me a big picture chart. Daily chart doesn't do it justice. This is not a swing chart.
There's a number that stands out.
Yes, it is. 46. Okay. Here's a stock that, like everything else, got destroyed in March of 2020, had to battle back. Here we've been improving. We're now moving towards the all-time high, back into its longer-term trends. And Matt, if you even back this out to like 10 or 12 or 15 years, real big picture, I think what you're going to see is a pretty consistent trending stock when it is in those healthy environments. That was when it was so strong through that decade. We took that year off. Here we are now, W pattern on the weekly into a long-term breakout at 46. This grabs my attention as an investor. It grabs my attention as somebody who's traded and owned this stock many, many times in the past, and also somebody who's done covered calls on this stock a lot. See, the Tackle 25 system, and Emily, I know you love your directional trades right now. You're back, you're focused, all that, but your bread and butter is cash flow. So this one gives you a couple of different ways you can play it. Tackle 25 is a wonderful covered call opportunity. In fact, Matt, if you go to the trade tab real quick, and let's just talk a little bit about the liquidity in the options for BSX. Here we are, it's got weekly options, like, it's got liquidity in those options, penny spreads in many of the different option strike prices. And by the way, part of this pick is an homage to my buddy, Keith King, who reminded me yesterday in our conversation on the podcast that even when he just drives back and forth from downtown Boston to his house, he passes Boston Science as well as so many other big medical firms up there in the Northeast. Cover call returns, couple percent on 24 days right there. Even the September monthlies, you're looking at like 2.1, 2.2, 2.3%. This is a good covered call stock. I wouldn't start it out as a covered call though. The way that I would approach this one, Emily, I'm going to give you two things you love. This long-term analysis is leading to a bullish opportunity if we catch a breakout. That has to happen above 46. So could you come out today and just say, you know what, I'm going to slap a covered call. If it gets called out, you bet. I think that's fine. There's nothing wrong with that. I'm waiting for the breakout. I'm going to pick up shares, equity on this, on the breakout. And then when I get technical conditions like an overbought condition or a little swing rally into a doji, I'll then turn it into a covered call in a position trade style. I got a couple of months I could write covered calls before I've got to worry about the next earnings report. Good 2% plus covered call on a stable fundamental company that's now coming back off of pandemic lows where it was impacted like many businesses were, about to break out into an all-time high. This is Boston Science. It's my pick for Queen's Court today.
It's your pick. I do have something that could or may not help you. It's up to you. It's your pick. It's your head.
Let me see if you're holding the sword. You can't throw that at me without video up. I need to know if the sword is like in hand or not.
I don't have the sword.
It is on your shoulder, right?
I don't have the sword.
I would love to hear it, my friend.
The only thing I'd say is it's been a volatile mess in this space for the better part of the pandemic, right? Healthcare has been great. Doesn't mean everything in healthcare is constantly great. You're finally recovering the pandemic price, but there's something that is starting to build out of this picture of volatility, because when you first look at the picture of technical analysis, you're basically seeing the entire story in 1 second, right? Mm-hmm. So you're immediately going to go to the most volatile moments of that stock's history, because that's just the way our eyes work. And we look at this and we look at this and we see a lot of chop and a lot of nastiness, okay? One thing you did just barely reminded me of something before the pandemic. Boston Science, and one of the reasons why we liked it so much on the Tackle 25 for 4 consecutive years, was the consistency that Boston Science had from a trending perspective. Would you agree?
Mm-hmm. Yeah, we love that part of it.
When you look at Boston Science over just this year, okay, and you remove the last 2 years of volatility, and you just look at the last year, you're starting to see a more constructive and consistent trend this year, circa before the pandemic. I love the potential breakout here, and I do share your same concerns fundamentally, right? Mm-hmm. But there's context there. Medical device company over the last year in the healthcare space has not exactly been where you want it to be. But as we move further into the future, you're going to tell me medical appliance companies aren't going to be vitally important?
is going to be consistent. They're going to hit their numbers the way they have for the last 15 years. I mean,
so
I have belief in that company.
I like I do too. I do too. But I do like the consistency over the course of the last 4 or 5 months. You break out. It's a clear picture above 46, guys. Like, yeah, let's call it 46 and a half, but it's a clear picture here. There's nothing there. It's good breakout.
That is my pick, my queen.
Well, certainly.
Now, if you have to kill somebody, I would still kill Tim.
We shall see.
The bull call analysis.
I need to know whether you snuck into the lab last night, Mr. Matthew, because we did talk about healthcare last night, and we analyzed UNH last night with another stock.
I will tell you right now, last night I was playing Among Us and killing Tim, so I did not sneak into the lab.
The class had a choice. We were looking at UNH, and I can't remember what the other one was. I think it was Lilly, but we were looking at a pullback or potential breakout, and the class went with a breakout. Lilly hasn't quite done that yet. In fact, today kind of had a little bit of a pullback, so it didn't quite break out compared to UNH. But we did look at UNH yesterday as well, because we were looking at that healthcare space based on the news that happened yesterday, approval of Pfizer and all that good stuff. So, really, really, really a good space to have, defensive area of the market. We keep talking about, whenever we see, we have exposure to growth and all these other areas of the market, doesn't hurt to always have something, have something in your pocket that's defensive, and healthcare is obviously going to be one of those places. So yeah, definitely looked at UNH yesterday. We didn't go with UNH yesterday. However, I still like it for a bull call, but we got to look at Boston Science.
Can I speak to Lilly very quickly?
You can.
Lilly is a great trending stock, and it's one of my favorite swing trades stocks in the healthcare space. It's been that way for a long time. And I think a lot of people like Lilly because you can do a lot of different things on Lilly.
Absolutely.
Right? I mean, it's kind of like everybody's cup of tea to a certain extent. You want a swing trade, you want a position trade, you want a cash flow, you want to do some advanced options. Whatever. Like Lilly just gives you a lot of ammunition there. United Health, I don't have the same feeling as a swing trade. It's like there's times you add, right? And there's times you take advantage of it. And I just feel like Lilly's one of those ones we're in and out a lot in Lilly. United Health, something you're in from more of a position to investment.
Oh, yeah. For sure.
Yeah.
For sure. And it was more a preference of, breakout versus, a Cody special, right? And, it was a class vote, but definitely did like UNH there as well. I gotta give Tim some credit. Go back to Boston Science for a second, because I remember how Boston Science made it in the Tackle 25, us having this discussion. And Tim has always been afraid of two things: elephants and robots.
Medical device.
Hence why the mascot for tackle trading is an elephant.
It's an elephant, right? And when BSX,
he has to face his fears.
Yeah, exactly. And I remember sending him a robot when BSX made it to Tackle 25, because one of the things we talked about was them making medical devices and them being robots.
Tackle, it's not just me.
I gotta give kudos to Tim for actually bringing up something that that triggers him. This is a company that could potentially make robots that end up being our doctors. So for him to actually bring it up is, I'm surprised you got through the whole thing, Tim, without panicking.
Thank you, Emily. I appreciate that. Face my fears. Yep, you bet.
Oh, but I do like that long-term chart going back to what it looked like before the pandemic, reminding us of BSX, because I really haven't had it on, in my watch list for quite some time. So I really like it when I do get those reminders of things that I used to love to do, but then I kind of put them off the side, and then you kind of forget about them because other things come onto your watch list, and you're like, oh yeah, that one was a good one for covered call. So that one was a good one for naked put. So I really like that you brought BSX back to my attention. You guys are making this so hard for me. You did both refer to me as M. At some point during your analysis, you did not refer to me as the queen. So minus
I was holding
one on both
the
of you
sword
for
at the
that.
time.
Doesn't matter. I didn't see you. But I gotta go with an oldie but goodie. I gotta go with BSX.
I don't even know what to say to that.
I mean, are you chopping, Matt?
I'm not chopping. I'm chopping Matt. Yeah, you're
I'm
staying.
getting chopped.
I gotta go Well, first of all, you overcame your fears and and talking about VSX and robots.
Wait a second.
And stuff, and then here you are.
I'm getting chopped on quality analysis so that we can give him a moment.
Yes.
My analysis is being questioned because
I'm not
we want to
questioning
make
your
Tim
analysis.
feel good.
Your analysis was great, but VSX was a favorite of mine. It's an oldie but goodie.
Is this Maury's with
I'm getting
Tuesdays with
nostalgia
Maury?
here. No, I'm getting nostalgic here with VSX. I want to go back and trade VSX now. So
it's a good breakout.
Yeah, it is. It is.
He does have a sword. Do you have a captain
Nah,
with a guard here?
my head's gone. Like somebody stole my sword and whacked me with it. I went samurai. I laid on my own sword.
Yeah, you did. You did. You're prone to hurt yourself with it. So you bring it on. You might just chop your own head off.
I did cut myself last week, so we're good.
Let's not do that again. I've seen some blooper reels. Let's not do that again. All right. Well, fun. Couple stocks in the strength of the market. Hopefully we got some value out there for you guys that are listening and watching. And back on the UNH for just 1 sec, Matt, I got a question for you on a bull call spread. Because question coming in from the chat from Dang Wan. He says, what would be the trigger for this one? And it's tougher to trigger on a bull call spread there, Dang. Sometimes what you got to do is you got to find pattern that you want because it's position trade analysis. But Matt, if you were going to identify a trigger, is it above the pivot high or is it above the candle today?
If you're looking to really kind of micro this, bull call spreads, I kind of feel they're grenades, not assassin type stuff. If you're in the zone, you're in the zone. And I do think you have the analysis to be in the zone just to lob that grenade. Mm-hmm. But if you are looking for a technical level that you're comfortable, maybe 427.5, but I'm looking at that 50-day moving average kind of literally right above today's high. So if you basically recover the opening high, which I believe, let me get you an actual number, 425.94. Mm-hmm. Achieve that, you're breaking back up above the intraday high. That's typically a traditional trigger.
There you go. All right. Back on the market. Let's start moving into final thoughts. Start wrapping up the show here for today. Emily, final thoughts for the team out there.
Final thoughts. I'm going to go listen to the podcast. I haven't heard Keith's voice in quite some time, so I'm going to enjoy listening to that podcast today. Catch the podcast if you haven't already.
I agree. It's worth a listen. Definitely worth a listen. You'll enjoy it. Give me a call after and let me know what you think. Maddie, final thoughts from you, sir.
Tuesday, boring, Doji Tuesday, but it's after 3 days of price appreciation. We have some major news coming out this week with Jackson Hole. Be with us for the rest of the week as we break down the activity throughout the entire week, including analysis on Jackson Hole later this week. But for today, you got the podcast. Enjoyed that Keith King interview. I'm certainly going to listen to it again, Keith, Em, because it was, again, I love Keith, and I could just sit down and listen to old traders talk forever, literally forever.
He is the Godfather.
He's the Godfather for a reason, for a reason. But so definitely check out the Trade Justice podcast later on today, and then this evening we got the Coaches Show as well. So check that out for the pro members.
That's right. All right, guys, that's it for our show here for today. If you've not yet done it, thumbs up, subscribe, and the bell as always. We go live every day. Markets are live, 12:30 Eastern. Come be a part of it. #Team Tackle. We'll see everybody back here tomorrow.